Hello Dairy Today viewers. On behalf of the Market 360 advisors here at Stuart Peterson, I'm Bob Davenport and this is your Dairy Week in Review for April 24th, 2015. So to get started here, let's take a look at where our CME dairy components settled at the conclusion of this week's trade. It was a good week overall here, specifically with Class 3 prices, but the other products definitely helped to support here. So blocks and barrels had a bit of an up week here, nothing major. Blocks settled at 161 even, up 3.5 cents on the week. Barrels settled at 162 even, up a penny on the week. Spot butter settled at 183 even, up 2.25 cents. May whey settled at 45.075. That's up almost half a cent on the week. And May non-fat dry milk settled just over $1, almost $1.50. That's up about 2 cents from last week's settlement. Now switching over to Class 3, this is where we really saw the gains here this week. May milk settled at $16.60. That's a gain of 61 cents from last week. And June milk settled at $16.97, up 97 cents from last week. A solid gain on the 2015 calendar average overall as well. That settled at $16.71 this week. That's a gain of 30 cents from the prior week's average settlement. So let's glance at what's been happening in the spot market now. Let's start out with our weekly cheese chart. Here we have a chart of the weekly block barrel average, and you can see that from the lows here back in January, February time frame, when the block barrel average got down to about $1.45, we've been making some pretty solid progress to the upside here. We haven't seen any major 1 week moves. It's kind of just been slow and steady to the upside. Now the block barrel average settled at 161.5 this week. That's up a penny and a half from the week prior. So again, we haven't seen any major week over week gains. It's just been that slow climb. That's just showing us that there's good buying demand there yet. We still seem to be kind of near that market equilibrium price. It seems to be in more of a comfort zone here. The sellers aren't afraid to sell blocks and barrels at these prices. At the same time, the buyers are right there. They're picking up any carloads that the sellers are willing to offer, and they're even bidding prices a little bit higher. So the buying interest is definitely remaining firm, and that's, I think, one of the main things that's been supporting the Class 3 market here. The fact that we haven't seen a 10-cent up week or so in the cash cheese market doesn't really seem to matter. The buyers aren't afraid to price some premium into those cheese futures, which are now holding about a 10-cent premium over the cash price, and that's been a big supporter of Class 3 prices as well. So we'll have to see if that trend continues. At this point in time, we haven't seen any warning signs of that demand drying up, but that is a risk, especially as we go into our high production time of year. If there was to be a lot of cheese that got brought to the spot market here, that could push cash prices down quite a bit, and the risk would be we see that premium that's priced into the cheese futures get sucked out really fast, and then we see those Class 3 futures fall apart in turn following that. So that would be the risk, but for the time being, things are looking pretty good, and we could see some good opportunities out there, especially if the cash cheese price continues to grind higher like it has for the past few weeks. So let's take a look at what we've seen in our spot butter and powder trade here. So been a little bit different price action than what we've seen in cash cheese, specifically when it comes to powder. So powder is the pink line here on the chart, and as you can see, we bottomed out in January just like we did in cheese, and butter did the same thing. Butter is represented by the blue line here, and you can see that we went through a nice correction in both butter and powder here, and we found a sort of a short-term top back in February, and then that's where things sort of started to diverge here when it comes to powder and butter. So powder decided to turn around and dropped to fresh lows. In fact, powder settled at the lowest levels that it's been at since 2009. We settled the week here at 93 cents even. That's up actually half a cent on the week from the 92.5 settlement from last week, and that's our low here. And again, that's the lowest cash powder price we've seen going all the way back to later in the year of 2009. So definitely at those depressed levels here. Now you can see at the chart though that butter has been going in the opposite direction since powder found this short-term top and dropped to new lows. Butter has been working its way and putting in higher prices. Again, just like cheese, the buying demand remains firm there, and the buyers continue to bid prices higher. On the week here, cash butter settled at $1.83 even. That's up 2.25 cents from the prior week. So we've taken out now this prior February high, and things are looking supportive there as well. So the higher butter price and the fact that the demand is there is probably the one thing that's also continuing to prop prop up the Class 4 price and limiting any downside there. Despite the fact that powder is at the 2009 lows, Class 4 prices are holding in there, and we can thank butter for that. So if the butter demand disappears and we see butter follow that same type of pattern like we did in powder, I would say the Class 4 market's probably going to take a big hit if that scenario were to unfold. So switching over to the Class 3 market now, again, going back to the demand that we've been seeing in cheese here. Again, the spot cheese price hasn't shown anything major. We haven't seen any major upside moves that would be typical of seeing such a rally in the Class 3 market. When it comes to our second month contract, which is currently the May contract for another week or so here, we've seen over $1 rally really since last week's low, since April 15th to the present. We've seen May milk and June milk both rally well over $1 here. And again, normally it takes a big spike in the cash market to sustain that type of upside move. But a lot of it is coming off of that extra premium that's getting priced into those cheese futures prices. So that's just showing us that the cheese market is probably right now kind of anticipating that the cash market is going to continue to work its way up. And that's what's been sustaining this rally here in Class 3. So you can see our low from back in January at 14.25. We settled this week at 16.60. Again, the May contract finished up 61 cents on the week, so that's been a very nice rebound, a really nice recovery from our January low here. And you can see that we ran into some resistance though right at the bottom end of this range here, and these are our 2013 lows. If you remember back in 2013, we spent most of the year just bouncing back and forth between this sideways pattern before things finally took off in 2014. So we seem to have run into some selling pressure at those lows. That's going to be the tough area to get through. If we can get through that level, then we could see more upside here in Class 3. But again, that's no guarantee. There's a lot of headwinds working against the Class 3 market right now. Fundamentally speaking, not a heck of a lot has changed over the course of the past months. Production is continuing to increase. Inventories continue to build. The dollar is still at the highest levels it's been in a decade, although it has pulled back from its recent highs, which could be supporting things a little bit. But again, all those headwinds could limit a really long-term move here, but we could see some more shorter-term opportunity. We could see some really good hedging opportunities out farther in the 2015 year. So definitely some things that you need to think about, I guess, if you're looking to be hedging that 2015 milk here. It could be some very good opportunities in the near term, possibly over the next several weeks. That would be good times for you to be stepping in and scaling into coverage. So to touch on one fundamental piece here, we did get our milk production report for the month of March on Tuesday of this week. So you can see here by the purple line representing the 2015 milk production that we were up 1.2% year over year. So March of 2015 production up 1.2% from March of 2014 production, represented by the green line here. And we've been up over 1% now for that first quarter. So we haven't seen any major increases in production over the past couple months' reports, but the fact that we are continuing with that trend of increasing production is a good sign that there's going to be a lot of supplies out there and that things could eventually put some pressure on the market prices for both cheese and milk, butter, etc. But you can see that we are heading into really our peak production time of the year. So next month we'll get our April production numbers followed by our May production numbers, and you can see that production is the highest typically in the month of May, as we all know. So over the course of the next month there could be a lot more supplies hitting the market, which again, all we need to see is a lot of cheese get brought to the spot market and push prices down, and that could put a lot of pressure on Class 3 prices and could send us into that next downtrend. So that is really probably the risk at this point in time and something to keep an eye for when monitoring cheese price action. So looking at the week ahead, not a lot as far as fundamental reports go, but just a reminder that the April Class 3 contract will be expiring on Tuesday, along with cheese and butter futures as well. And that'll mean that the May contract rolls into that front month spot starting on Wednesday. So aside from that, that's going to be it for us here today. On behalf of the Market 360 advisors here at Stewart Peterson, thanks for watching and have a great weekend.